Welcome to the Trading Psychology and Mindset Podcast. My name is Ash Plaisted. I will be your host as always. Now, just a quick little bit about me. I am an avid trader myself, as well as being a very curious student of human nature, how our minds work. And understanding how our mind and work, for me, was the pivotal shift that changed my trading life. And understanding this, I believe, is fundamental to every trader breaking through to consistent profitability, which is what each and every one of us want, right? And this podcast is all about answering that question and providing real, tangible, and actionable steps you can take to train the mind you bring to trading into the mind you need for trading success. Now, before we get started, be sure to head over to my website, mindsetfitmethod.com, where you can check out more helpful content, plus subscribe to my newsletter, Mindset Reflexology, where I dive deeper into these advanced trading mindset strategies. Now, today's episode, responsibility and causality in trading. Success depends on one and is killed by the other. I hope that got your attention. Now let's head over and get started. Now, conventional thinking relies on causality, cause and effect. In mindset reflexology, we rely on responsibility. Now, your choice of models has an enormous effect on how you experience life and trading. In mindset reflexology, we hold that causality is a convenient illusion without any real basis in fact. Now, for example, let's say two cars collide at an intersection during morning rush hour, and people call this an accident, right? Very curious, and then look for a cause. Determining the cause is essential in the causality model, since it determines who is to blame, who is guilty or innocent, and who pays for the accident. Now, this game is so prevalent in society and so lucrative that people even make up accidents. The application of causality shifts focus away from claiming responsibility and towards the mechanics of assigning blame. Now, just as a note here too, the words responsibility and causality mean radically different things depending on which model you favor. In the responsibility model, everyone is responsible for everything and causality is just an illusion. In the causality model, everything has a cause and a select few people are responsible. Now, in what I teach, mindset reflexology, a traffic accident does not have a simple cause. To find a cause, we need to account for the positions, velocities, and accelerations of the two vehicles at the time of impact. This is the causality version, by the way, not the responsibility version. In the causality model, the positions of each car at the moment of impact is a function of the driver's time of departure from home. This in turn depends on how and when he eats his breakfast and on countless other factors. Then further back, the position of each car also depends on its driver's interaction with all the drivers who are also on the road during the entire journey before the event. Furthermore, the positions of all other cars depend in turn on their interactions with each other and their departure times from home, and whether or not those drivers stop to converse with their kids on the way to work, for example. Now, when you start to dive deeper into this, you can see, right, it gets crazy. You start to calculate all the causes, and you soon see that everyone in the world somehow plays a role in this communal calculating. And determining cause would require a form of computation that's beyond current technology, okay? Be incalculable. There is actually no such thing as simple cause and effect. A more accurate model, the one that I prefer, is that the world is a complex system in which all the elements are simultaneously co-creating, ever-evolving moment of now. Everyone participates in everything, and to determine blame and guilt, you really have to know whom you want to blame and who you want to be guilty before you make the calculation, right? In mindset reflexology, the responsibility model, we hold that everyone participates in everything and that there is no such thing as causality, blame, or guilt. And we apply this to trading. And we realize that we cannot predict the future. In fact, we do not even think the future exists. We simply operate in the now. We do our best to control risk, go with the flow of life, and we cut our losses when things go against us. Now, when we apply this to trading, essentially trend trading, there are some rules. We trade with the trend. We ride winners. We cut losses and we manage our risk. And in actual fact, I truly believe that causality is foundationally involved in providing the philosophical basis for Western civilization. In our causal world, we pin blame on people who stray outside the rules and we punish them. Now, absent the belief in causality, our Western legal and political system would fall apart, right? In mindset reflexology, we do not blame or guilt. Those are the concerns of broken relationships. In mindset reflexology, we focus on building good relationships with others who know the value of clarifying intentions, claiming responsibility, and helping each other untie our broken pain points. Now, let's talk about the application to trading. Causality, I think, provides the basis for fundamental analysis. So we're talking fundamental analysis being an approach to investing and trading in which the analyst forms an opinion about what factors are the really important causes, right? He then proceeds to spin up a story about how these causes are bound to make something happen in the future. So the fundamental analyst typically makes a recommendation that the future looks bright for some company and for the entire industry or sector as well. Let's have a think about this. Some of the problems with fundamental analysis are as follows, right? Number one, determination of cause is, I think, at best arbitrary, it's ambiguous, basically impossible. Number two, the future does not exist, right? It hasn't happened. Number three, the current price in that particular stock may already discount the fundamental story. And four, trading on a fundamental model does not afford us any risk control. Now, of these four causes or these four problems, risk control or lack thereof is probably the most dangerous. So the problem with fundamental analysis, right, is especially when the analysis believes in the myth that things return to normal, right, return to the mean, is that the thing you buy at $50, for example, looks even better if it falls to $45. So say you then buy more at $45 and then it goes to $35. So you buy even more, right? If it's good at $50 or more dollars, then it must be great at $35. This is the problem with that causality thinking. You then go and borrow money on margin to double up all your purchases at $25, right? So you're continuing to load up as the price goes lower. Then it gets to $15 and you're sure it's going back up. And you would probably buy even more if you weren't already busted and broken, probably in debt, right? That's the causality fundamental model. In mindset reflexology, we do not pretend to understand anything. All we know is the direction of the trend. Even that is subjective depending on your time frame. Some people look at long-term trends that go over decades. Others look at short-term trends that are minute by minute, tick by tick, right? And they can be in complete contrast with each other. Now, no matter which trend you look at, if you subscribe to the responsibility model, all you can do is go with the trend. Let your profits ride, cut your losses, and manage risk. So you see a stock recommendation or apply this to any commodity, any market, an index, a currency. So you see a recommendation and there's plenty of good reasons from the fundamental analyst. So naturally, in our mindset reflexology model, we are suspicious, right? However, you decide to keep your eye on this stock and you see it fall from 50 to 45 and you see it's going down, so you have even less interest in it. This is the difference in responsibility thinking. Because it's falling in price, we lose interest. We don't suddenly think it's cheaper. It falls to $35. And then this move confirms to the believer in the responsibility model that it's on its way down. That is the trend. So you think, you might consider to buy the stock one day in the future, but only if it can show enough strength to get back to $50 and then start going higher from there. So, in that situation, you place an order with your broker that instructs the broker to buy at $51 on stop. However, of course, it never trades there and you do not lose 1 cent on the stock. Meanwhile, the fundamental analyst discovers some new causality and comes out with a new recommendation. He thinks it's time to get out of the stock since prospects appear bleak for the whole sector. Okay? Now, Instead of causality, mindset reflexology practitioners subscribe to responsibility, including its corollary, intentions. Now, the dictate here is intentions equal results. To determine your intentions, you simply need to notice the results you are getting. Look at your results. Look at your trading account. That'll tell you what your true intentions are. Now, this act puts your attention, your result, and your responsibility all into the moment of now, not the past, not the future. If you don't like the result you are getting, you notice you also do not like your intention. You can change your intention, right? In the causality model, there's this temptation to blame others and view them as being in charge of your life, right? Doing so actually decreases your power. We know that you can change yourself more easily than you can change others. This is a fundamental tenet of mindset reflexology, in that we are responsible for our own intention, and this will set you free and generate your power to act accordingly. So we see here that trend trading is different from fundamental trading. The trend trader simply buys things that are going up and sells things that are going down. Very simple. And as such, the trend trader's portfolio contains big winners and small losers. So on balance, he is ahead of the game and continues to win. So this trend trader, this responsibility trader, does not allow losing trades to erode his trading capital, nor to corrode his soul. And one problem with trend trading, however, is that sometimes, just when a trend trader enters the market, the trend changes and goes against him. Okay, that happens. Then you exit with a small loss. And us trend traders, we call these whipsaws, a natural part of the market, right? And sometimes a trend trader might have a whole series of whipsaws where they get bounced out at small losses. That's how they show up in a trend trader's account, small losses. This is where risk management comes in. The trend trader studies himself. He studies the markets and he develops a system for trading the trend. And then he conducts simulations over historical data. We would call that back testing, to get a sense of the frequency and severity of these whipsaws. And he arranges his position sizing, the size of his positions, in such a way that he can tolerate strings of whipsaws. He can tolerate 1, 3, 5, 10 small losses in a row, knowing that his system will come out on top. So when good markets come along, he is ready, he is willing, and he is able to take full advantage of them. At the time the trend trader buys a stock, right, the fundamental analysts generally are not even looking at it, much less putting out a recommendation to buy it. The fundamental analyst generally starts looking at a stock and making up reasons for its rise when he learns that some trend traders are already on board and profiting from it, and his customers want to know what's happening, right? That's what the fundies do. The customers want a causal reason for the stock going up before they can buy it. So the fundamental analyst gives them one. I know some good fundamental analysts, good people, but that's how they operate. They often recommend buying a stock a little below the market, right? This tactic compounds the problem. If the stock goes down to the buy point, guess what? It's already demonstrating weakness. If the stock goes up, then limit orders miss the move. You can see the problem here, right? Some traders who describe themselves as fundamental analysts, can seem to do very well. But however, I would argue if you examine their methods closely, you see that they actually do follow strong trends in price and earnings and market share and so forth. Trend traders buy a stock the moment they become aware it's trending higher, or if they're short sellers, they sell the stock the moment they become aware it's trending lower. If it continues up, they're already in and they'll keep riding it. If it goes down, they simply sell it. Causality is expensive at the intersection of two streets, in the car crash example, and it is also expensive at the intersection of buyers and sellers in the market. Mindset reflexology tends to keep our mind clear and our spirits buoyant. Okay, this is the difference between causality and responsibility. Success depends on responsibility. Causality is generally the path to failure. I hope you've enjoyed this discussion around causality and responsibility and the differences, friends. So come and make the decision to start traveling down your own path to self-mastery in trading. Responsibility is the path. It's what we teach in Mindset Reflexology. So come and learn. Go and check out my website, mindsetfitmethod.com. Enjoy all the learning materials there. Go to my YouTube channel. Particularly subscribe to my Advanced Trading Mindset Strategies newsletter, which is called Mindset Reflexology. And I dive deeper again into these subjects. So friends, make a move in the right direction. Take intentional action now. And I will see you on the next episode of the Trading Psychology and Mindset podcast.